Hello and welcome to the program. Thank you all for joining us today. This is Moneyline with Nancy on African Independent Television, AIT. I am Nancy Naji. Let's get started. Yesterday, I did tell you on the program that the Statistics Agency, the National Bureau of Statistics, will release its inflation numbers. It did that yesterday afternoon. And letting the cat out of the bag. Of course, the news is everywhere that inflation climbed to 19.64%, as you can see right here on the wall. Year on year, 96.64% from 17.38% it was in July of 2021, and from 18.6% it was in June 2022. On a month-on-month basis, the increase was at 1.82%. Now, let's go back to the next slide. Why are we seeing all of this? Because of price increases across food products, from bread, cereals, meat, fish, soft drinks, and all of that. If you go to the market, which I know that all of us do, at least we buy stuff. If you don't buy from the market, you buy from supermarket or wherever, you would have found out that prices have skyrocketed. So we're seeing increases across board. This suggests that the general price level in July of 2022 was 2.26% higher than in July 2021. Now we're taking a look at other prices here, as you can see right now on the screen. And this is core inflation. All this constitutes core inflation. What is core inflation? All items less farm produce, because we have headline inflation, we do have core inflation, and we also have food inflation. What else, guys? I hope I don't move faster than you this morning. Okay, let's move over to the food index. You're seeing that year on year, food inflation increased from 21.03% of this time last year to 22.02%. But on a month-on-month basis, you're looking at 2.04% that food inflation is at right now, from 2.05% in June of 2022. Now, take note of this figure, which I'll be asking my guest in a bit. Take note of this figure. Does that suggest that food inflation is slowly decreasing? Okay, not slowly decreasing. Let me put it in a way that you understand. It's increasing, but at a slower pace. I hope you understand what I mean. So food inflation, 2.04%, month on month, from 2.05% this time June last year. Now, the next slide. Very quickly, guys. Now, if we come over to food inflation, year on year, the highest rise was recorded in these states. Kwara State 29.28%, Akwa Ibom State 27.22%, Kogi State 26.08%. What I am saying, the English or the Turanchi or the meaning of what I'm saying, is that food inflation recorded the highest increase in the states. Now, why are we recording such high increase here? One may say, okay, widespread insecurity, or also the transportation costs from the food belts to where this food, or from those food belts to where they come to in the states. Now, if we take a look at the slowest rise, we recorded the slowest rise of food inflation in Kaduna State, Jigawa, and Anambra State. For the Anambra State, it's a bit not too clear for me, but I guess that I will discuss that with my guest in a bit. But for Kaduna and Jigawa State, one might say, okay, they do produce food in this area, and we're seeing that the food might not necessarily also go to other states. Now, what else, guys? Good. Now, urban inflation in urban areas. Year on year, we're seeing 20.09% from 18.01% this time last year. So that's an increase of 1.82% month on month, from 1.82% in June of last year. Let's move over to rural inflation very quickly. Rural inflation also increased, as you can see, 19.22%. So there's nowhere that is really safe in terms of inflation. If you are living in the rural areas, you are definitely experiencing inflation. Whether you're also in the urban areas, the Asokoros, the Metamas, the Banana Islands, and all of that, you are experiencing inflation. Like I've always said, and I will still repeat it on the show today, inflation, like I saw a tweet from one of our viewers this morning, I think Hilary Ndemele, says inflation is the #1 enemy. it is a thief. So whether you're a rich man or a poor man, you are getting the brunt of inflation right now. Let's move over to the next slide, please, shall we? Okay. Still talking about, okay, core inflation. Core inflation excludes volatile agricultural produce, which I mentioned earlier, and it's at 16.26% year on year. On a month-on-month basis, 1.75% from 1.56% in June of 2021. Prices for gas, liquid fuel, solid fuel, as well as passenger transport by road, passenger transport by air, of course, that's air tickets and all of that. A lot of you do know what I'm talking about right now. A Lagos to Abuja trip will be costing you about 100,000 naira economy ticket, which was like a year ago was around 30,000 naira. So you can see what inflation is right now in Nigeria. Okay, so the summary of what I'm saying, this is it. Inflation jumped to 19.6% in July from 18.6% in June. July inflation is at a 17-year high. The last time we saw this kind of inflation was in 2005, I think precisely in September or so, if I'm not mistaken. July 2021 inflation was a 17.38%. So by this time last year, inflation was still at double digit, but 17.38%. Higher inflation is due to food inflation pressure by bread, cereals, meat, milk, flour, eggs, and all of that. A crate of egg, the last time I bought it was 2,000 naira. By this time last year, it was just around 1,000 naira. Now, let's move over to the next slide very quickly, guys. July inflation exceeds World Bank 15.5% inflation projection. The World Bank did tell us, at least in the NDU, the Nigerian Development Update that was launched in June, that it's foreseeing inflation at 15.5%. We've exceeded that, definitely. Jigawa, Kaduna, Borno recorded the slowest rise in headline inflation, while food inflation was highest in Kwara, Akwa Ibom, and Kogi, and we recorded the slowest food inflation in Kaduna, Jigawa, and Anambra. Do we have any other slide next? Okay, now what we've been able to do was to compile inflation rates in Africa for you, and that's it on the screen. Let's quickly take a look at how other African countries are faring. Right now, inflation in Nigeria is 19.6% from 18.6% in June. Now, hold that figure on one hand and take a look at other countries. The next, okay, I wanted to go to Ghana, but let me start from Ethiopia. Ethiopia's inflation is at 33.5%. And this is what it is right now. It's down from 34% a month earlier. That is why you see down from or up from, let's see, Ghana's inflation 31.7%. Ghana's inflation was at 29.8% previously. In fact, Ghana's MPC is going to be meeting in an emergency meeting tomorrow. I don't know why the emergency meeting has been called. Is it because of this or something else? They also do have, I think there was a rumor going on in Ghana just a few days ago about domiciliary accounts and all of that. So I don't know if that's why the Bank of Ghana is calling for that emergency meeting, but we'll get to know tomorrow. Now, Sierra Leone inflation up from 24.9% to 28%. You do also know that there was a cost of living protest. We've seen cost of living crisis almost everywhere across Africa. But in Sierra Leone, there was a protest against the cost of living crisis. And you can see that there, 28% from 24.9%. Malawi, 23.5%, up from 19.1%. Malawi, so much economic mismanagement going on in that country. Angola, we are seeing that inflation, it's steadily decreasing from about 22.9% to 21.4%. Now move over to Rwanda. Rwanda is also suffering inflation from 16% to 19.6%. Now let's move over to Algeria, where inflation skyrocketed from 9.5% to 11.7%. In Mauritius, it's also up from 9% to about 11%. Zambia, just about 0.2 percentage points, from 9.7% to 9.9%. In Kenya, where the presidential elections result just came out and has declared William Ruto as president for now. Yes, because I don't want to go into all of that. Let me stick with my inflation story. 8.3% from 7.9%. We also do know that there are a lot of stuff happening in Kenya's economy right now, and it needs a leader that will fix all the economic challenges. South Africa, 6.5% it was previously, to 7.4% it is right now. And in Morocco, 5.9% to 7.2% right now. Now, what you're seeing, it's inflation in the Americas. For the United States, we saw that the inflation print came in surprisingly last week, where America inflation was at 9.1% previously. Now it's at 8.5%. We also do know that President Biden says that he came up with an Inflation Reduction Act, which some people did say, oh, okay, it's talking about whether, moderating the soaring inflation in the U.S., or is even more about his Build Back Better plan. But we'll get to see that. Canada inflation is at 8.1%, and now, a month ago, it was about 7.7%. In Brazil, inflation is at 10.07%. About a month ago, it was at 11.89%. Now, let's talk about Europe. In the UK, inflation is coming in at 9.4% currently, as against 9.1% it was previously. In the EU area, 8.8% it was just some weeks ago, currently is at 9.6%. In Germany, inflation is at 7.5% from 7.6%. France, 6.1% inflation print right now, as against 5.8%. I just had to take you through a background of inflation in Nigeria, inflation in Africa, and inflation at least in the major economies. And that will give us a foundation for today's discussion, which I will start shortly with Paul Alaje, the senior economist at SPM Professionals. Our inflation, a lot of analysts have been saying, okay, it's externally also induced. We're not out of, we shouldn't be isolated from the rest of the world and all of that. We do have our structural or legacy issues, but are we out of the woods from our structural or legacy issues? Or this inflation, is it self-inflicted? With the MPC meeting that is just a few weeks away, perhaps like a month and a week away, will the MPC be forced to raise interest rates again because inflation is soaring? Or will it wait and see, bearing in mind also that we will have GDP numbers that will be, that will come out from the National Bureau of Statistics, at least, I think, in the next 2 weeks or so, August 26th, if I'm not mistaken. So putting all those parameters together, we'll be discussing it shortly with my guest. Don't forget to join us on all our social media accounts. The handles are on the screen right now. Tell me what you think about our discussion this morning and how you've been coping with inflation. Whether you are poor, whether you are rich, they bite everybody now. Whether you are the enter private jets or they take champagne, they bite everybody, because even though you're a rich man, you see more people begging you. But the bottom of the pyramid are those that are getting it hot right now, because inflation, according to the World Bank in June, says it will push millions of people more into poverty. Don't forget, we have about 100 million Nigerians that are extremely poor. Nigeria is the poverty capital of the world. Those 100 million live on less than $1.96 a day. We'll be talking about them when we return from this break. Do join us again.
Do you want to live your life financially free? Do you want to take your business to the next level and succeed? Then the time is now.
Moneyline with Nancy on AIT presents
the Personal and Business Acceleration Masterclass, a live conference geared at revealing top secrets by elite business experts and life coaches in Nigeria on ways to improve yourself, business, and create wealth. Date, Saturday 17 September 2022. Venue, Nigerian Export Promotion Council, Plot 424. Agunyi Ronsi Street, Maitama, Abuja. Time, 10 a.m. to 4 p.m. To register, visit www.moneylinewithnancy.com/pabam.
For more inquiries and sponsorships, contact 0814-833-9088 or 0906-691-2600 and info@moneylinewithnancy.com. Don't miss this opportunity to greatness.
All right, welcome back to the program. Paul Alaje is joining me right now to discuss. He's the senior economist at SPM Professionals. Hello, Paul. Welcome to the show.
Yeah, thank you so very much for having me.
I know you were watching me when I was doing that analysis. So, you know, I had to really give a breakdown as a foundation to this discussion. What was the sense you made when you saw this from the National Bureau of Statistics yesterday? Let's start from that.
Well, for me, it wasn't a surprise because we have not prepared for the future we found ourselves as a nation. I understand that the world is going through a unique moment. Maybe I should not use the word unique, a difficult moment right now. It started with the tax war between America and China, late 2018 to 2019. And by 2020, it was COVID that came. 2021, or beginning of 2022, or part of 2021, we started seeing invasion. About 2022, we started seeing invasion of Russia in Ukraine. Who will touch the mind of Putin? Nobody knows. And we have also heard of new variants of COVID. We have seen diseases, you know, people finding solutions to diseases happening around the world. What many may not know is that for every explosion that go off in Ukraine, other countries that depend on either Russia or Ukraine for grain or for any input at all will suffer. The part of people that will suffer. So the cost of war is not just people dying either in Russia or Ukraine. The cost of war is high prices because many of us have abandoned some of the skills, some of the technology, some of the things we're trying to build and believe that we have this grain, this input relatively cheaper in other parts of the world. And economics supported it to an extent in the name of cost, relative cost advantage, that if a country has relative cost advantage in some output, it's better for you to depend on them and focus on where you have competitive cost advantage. But you see, what we did not check is that there are a lot of assumptions in the relative cost advantage theory. And when you look at the assumption, does it really favor us as a nation or does it favor us as a continent? Beside the numbers that you have mentioned to us today, if you have friends across across this continent, a lot of people will tell you, the rich, the poor, the average, the deprived, you know, everybody seems to have things to complain about. Everybody have concern. People are hungry. People are hungry. And when you are hungry and angry at the same time, I think it's double jeopardy.
If you take a look at this inflation print that came out yesterday, okay, that's the inflation data. Sorry, guys, I'm just taking a look at the wall. I'm taking a look at, you know, the projection. January this year, we're at 15.6%. Now we're at 19.6%. If you take a look at that trajectory, what does it tell you? Does it tell you that this rise will continue till the end of the year? Because we're already in August. Yesterday's data, 7 months data. So we just have about 5 months to the end of the year, about
Absolutely.
5 months more data to expect.
And December effect is yet to be added. November, December rush.
Isn't it?
They are yet to be added.
Okay.
Because demand for money would increase.
Okay, about the harvest season point of view?
Yeah, it will neutralize. It may neutralize it because as it comes, people want to stop for December. Whether you're a Muslim or Christian, everybody is preparing for a new year.
So if it does neutralize it, are we going to see a slower pace of increase?
Maybe not necessarily, because demand may also induce. And when you talk about Africa, that will affect food inflation.
But demand will, okay, you said demand will increase if people have money. Because if you also take a look at what I analyzed earlier, which I did also say I will ask, I don't know if you noticed it. I think for the food inflation, I guess we can bring that back.
0.01 reduction. That's so marginal.
Now, does it also tell you something that perhaps Nigerians don't have money or Nigerians are broke?
Yes,
in terms of even
side.
food. Yes, the
side.
demand side is decreasing, that people cannot really afford food anymore. Because like I always say on the show, these numbers that I reel out all the time, these numbers are not just numbers. They are faces of people.
Yes.
You know, these numbers are humans, you know.
Yes, maybe I should also add that.
Yeah.
That you have seen 19.6, yours could be 42, another person could be 11. So that if you have said 19.2, 19.6, it don't mean that yours is 19.6. What the Bureau of Statistics have done is to look at basket of commodity. It could be that in the last 1 year you have not been in the air. You've not traveled from Abuja to Lagos. So in that basket of commodity, you might not be affected. Somebody who has been in a place for 2 years and have not even traveled by air, you know, it would say, oh, you mean air ticket was 30,000 2 years ago and it's now 100,000. So it's not part of the basket. But your own basket, on the average, you will be around 19.6, even though some persons inflation could be about 50 when you isolate what you consume in the basket. And apart from this, it is not every commodity that is in the basket that is measured by the National Bureau of Statistics. So, but on the average, based on what is measured, the Bureau of Statistics is saying you have around 19.6. And if you ask me, is that high? I would not answer. I would say the central bank's target is
6 to 9%.
6 to 9%. And if we are doing more than double of what our Apex Bank is targeting, then we know we have a lot to do. And we need to work it to bring it back or to tame it to become something that we can cope with right now.
Now, the question which, and let me act as the devil's advocate, is that if you take a look at Nigeria, let's go back to the inflation in Africa, which, dovetailing from what you've said in terms of is 19.6% high. If you compare it to other African countries, how is Nigeria faring?
Well, I would not, you see, this is the danger of comparing percentages. You should compare quality of life. Recall that there was a time the president said, oh, why should we be selling PMS at a certain rate if Saudi Arabia is selling higher than us? What was not said is the per capita income in Saudi Arabia. And what an average person in Saudi Arabia takes home as pay. Compare that to 30,000. Whether you use official rate or you use parallel market rate, divide 30,000 by exchange rate. And how much does that come to in dollars for a minimum wage? And be mindful that not everybody earn up to minimum wage, because 42% of our numbers are living below poverty line. Over 98% we discussed on this your show. A couple of years ago, when UNDP released report of people living in multidimensional poverty, over 90 million Nigerians, they don't live up to minimum wage. So the question is, how do we then compare? Blanket comparison between us and other countries. See, 1% or 2% increase in UK is more than 5% increase in Nigeria. Because £1 increase in bread is about 700 naira in Nigeria. Imagine what we are buying bread now. We now say it increased by £1. That comparison should be economic specific.
So for those of you that are economists, rather, how should things be measured?
Okay, so
do you understand what I mean?
I get
because
you clearly.
Because it's like from what you're saying, 1% in Nigeria may not necessarily mean 1% in the United States.
Yes, I get you very clearly. You see, when if Fed increase rate by 1%, in Nigeria we have issues. If you increase by 5%, you want to destroy Nigeria. Do you get my point? If you increase rates by 5%, then you are creating problem for Africa. So there are some things you can't do because you are a big boy. Then you have to be mindful of others. So but when economics are comparing, we are looking at not just inflation pressure, because inflation pressure is different from inflation rates. What pressure will this inflation be? How will people be able to cope with it? I give you an instance. Look at the inflation numbers for July. What is one of the contributors? Because the price of PMS was marginally increased. Cost of energy, and you can look at core inflation, cost of transport, marginal increase. Imagine those that advocate that government should remove subsidy and there will be no impact at all. They should tell them that they are not truthful.
So where do you stand? Because if a lot of people are saying government should remove subsidy and channel those monies into something else.
What are they?
Into health, into education. Those are things that will build human development. That's the argument of some people. Some are also saying, don't take it off. Like labor, check the subsidy, let's be transparent, that we are not even consuming as much as we are. Some are also of the school of thought that let us take away the subsidy, but let it be fixed. Where actually do you stand? Bearing in mind, and let me just oppose it to where we are right now, that Nigeria is Professor Patutomi told me 2 weeks ago, Nancy, Nigeria is broke. There's no missing words about it. Where we are right now, where your revenue or your debt servicing cost exceeds your revenue. So in the midst of all of this.
Sri Lanka is the first. I'm sure it will not be the last. And I will not want to say more than that. Sri Lanka is the first, but will not be the last.
Sierra Leone just had its own protest.
So, and the impact of what we have in Sri Lanka, I'm sure may spread if governments of nations don't understand the impact of inflation, poverty, and unemployment in countries. This is where I stand on subsidy. Remove subsidy gradually, but prepare people's mind. That's one. Two, don't start removing subsidy when you don't get your refineries working. We have 4 refineries, 3 in South, 1 in the North, in Kaduna State. As we speak, there are still people working in a dysfunctional organization, and government is paying salary in a dysfunctional organization. 0% output, 0% output. Not 1 year, not 2 years, not 3 years, not 4 years, not 10 years. We have refineries, we are paying billions, not my figures, Auditor General of the Federation. We are paying billions to maintain, turnaround maintenance without an output. Come on. That is why those that must run our country must have private sector knowledge. They must have it. So when you talk about revenue, revenue is everywhere in Nigeria, but we have refused to pick them. What we want to pick is to look at how to tax more people in their personal income, to tax more people in VAT, to bring telecom tax. But those are not things that will liberate you. 7.5%, what is the impact? People are paying more. What has it done to government revenue? One devaluation has neutralized the effect of telecom, because we still import. And all my figures, check the National Bureau of Statistics. Over 300 billion naira is used to import per quarter, not per year. Antibiotics. And you see infection everywhere. $300 billion, billion naira, on quarterly report of the National Bureau of Statistics. It's a government agency. So if you are spending that, and we don't think that we need to be very methodical about substitution, import substitution, export promotion, and we say we are looking for revenue. Look at what central bank has done, thankfully. A lot of people have criticized central bank in supporting farmers and bringing all of those things. If those things were not there, the truth is that a bag of rice will possibly be 70,000 naira by now. But if they were not there, it's not sufficient. That's why it's still expensive. Because, you see, the quick fixes. I remember when government came in 2015. 2015 towards the end and 2016, my conversation with you was on quick fixes. Oh, government is going to do this. And I mentioned that economics problems are not solved by quick fixes. You have to be methodical about them. 7 years down the line, how much of quick fixes have solved us, have helped us from security to poverty to hunger to inflation to unemployment?
Are you saying that, are you taking off quick fixes solutions? Are you throwing it out? Because there are some economic problems. Okay, take a look at what came to my mind now is the border closure, for example.
Is the foundation of inflation.
So is that the foundation of this inflation?
This inflation, trace it back to 2017, 2018. Inflation started surging. Dr. Emefiele did everything, increase rate, arrange rate, he did everything, but it was beyond him. See, economy is on a tripod. Monetary, fiscal, and trade. Governor Emefiele is only one leg. Central Bank Monetary Policy Committee meeting every 2 months is only one leg. If your fiscal authority does not, they don't see beyond paying salaries. It can do all economic policy. It's only 1/3.
Now, Paul, I was speaking with an economist some weeks ago, I think on Twitter Spaces, I think some months ago or so, and we were on that Twitter Spaces and we're talking about inflation, and he did say how we can get this inflation down. Let's open our borders, for example, getting food prices down. Let's import rice into the country. Let's allow rice imports and every other thing, and you see that the prices start crashing. And I came at him, I was like, I don't know if that is good, but I also understand where you're coming from in terms of when you supply the market,
supply
of course.
increases, but this is it.
You know,
Anything you are
price
bringing to
price
your
crashes.
country, anything you are bringing in your country, don't bring it dry. This is what it means by that. Bring it wet. Don't bring it dry. Don't squeeze out jobs in it. I would say don't bring in raw rice. Processed rice. Bring in raw rice. Check out if you have sufficient processors in your country. If there are sufficient processors, make law, quota imports for paddy to support what our local producers are doing. As I talk to you, one of the scarce commodity you have in the market is paddy. And if you don't have sufficient paddy, then you have to deal with prices because people want to buy. So, but our farmers in that policy, we should not also do it to now take away all the gains of central bank through several programs they has done within the grain subsector in agriculture. So we have to look at it. But is supply enough? The answer is no.
Okay, Paul, let's quickly take a break. And when we return, we will continue this conversation on inflation in Nigeria. I would love to hear from you watching right now. All you need to do is to tweet me at Nancy Ilu-Onaji. You can also tweet us at Moneyline TV. That's on Twitter. We'll be right back.